Are you ready to dive into the fascinating world of Mullen stock? Get ready to uncover the thrilling journey of this company's price fluctuations. We'll explore the twists and turns of Mullen's historical price data from the peaks to the valleys. On May 22, 2023, the stock took a different path. It opened at $1.04, hitting the same high of $1.04, but plunging to a low of 93 cents and finally closing at 95 cents. Join us as we journey through the ups and downs, exploring the patterns and trends of Mullen stock. Brace yourself for the unexpected as we unlock the secrets hidden within the numbers. Before diving in, note that we are not financial advisors, and this video is for informational and educational purposes only. It does not constitute financial advice or recommendation. You should always research and analyze before investing in stocks, especially in high-risk and high-reward stocks like Mullen. You should also be aware of the risks and uncertainties involved in the stock market and never invest more than you can afford to lose. Mullen is a company developing electric vehicles and battery technology with a vision to create affordable and sustainable transportation solutions for the future. Unfortunately, the stock has been on a wild ride in the past month, dropping from $1.46 per share on May 4th to 91 cents on May 23rd. That's a massive 37.7% decline in less than 3 weeks. But don't let that scare you away from this stock. On the contrary, this is an excellent opportunity to buy Mullen stock at a bargain price and make huge profits in the long run. Why? Because Mullen has a lot of potential and upside not reflected in its current stock price. Let us explain why. First, Mullen underwent a 1-25 reverse stock split on May 4th, meaning every 25 shares of Mullen were converted into one. This reduced the number of shares outstanding from 1.75 billion to 69.89 million. The reverse split was intended to increase the stock price and meet the $1 minimum bid price requirement for continued listing on the Nasdaq Capital Market. Instead, the stock failed to maintain its momentum and slid down. You might think this is a bad sign and that the company is desperate and struggling. But this is a smart move by the company and a positive sign for investors. Why? Because by reducing the number of shares outstanding, the company is increasing its earnings per share or EPS and making its stock more attractive and valuable to investors. EPS is one of investors' most important metrics to evaluate a company's profitability and growth potential. By increasing its EPS, Mullen shows that it is confident in its ability to generate future profits and is willing to reward its shareholders with higher returns. Secondly, Mullen reported its fiscal second quarter business update on May 15, 2023. In terms of operating expenses, general and administrative expenses, it was increased to $47.4 million in Q1 2023 compared to $29.3 million in Q1 2022. In addition, research and development expenses rose to $20.5 million in Q1 2023 compared to $1.2 million in Q1 2022. Overall, total operating expenses amounted to $67.9 million in Q1 2023 and $141.5 million for the 6 months ended March 31, 2023. The company reported a loss from operations of $67.9 million in Q1 2023 and $141.5 million for the 6 months. Additionally, other financing costs and derivative liability revaluations further impacted the financials. Mullen Automotive's net loss before income tax benefit was $117.4 million for Q1 2023 and $496.3 million for the 6 months ended March 31, 2023. The company also reported a net loss attributable to common shareholders of $106.9 million in Q1 2023 and $483.8 million for the 6 months. Moving to the balance sheet, as of March 31, 2023, Mullen Automotive had total assets amounting to $402.7 million. In addition, the company held cash and cash equivalents of $60.3 million, restricted cash of $26.4 million, and inventory worth $7 million. Regarding liabilities, Mullen Automotive's current liabilities totaled $121.5 million, which included accounts payable, accrued expenses, and other current liabilities. In addition, the company also had long-term liabilities such as notes payable and lease liabilities. Regarding stockholders' equity, Mullen Automotive reported total equity of $263.1 million, including preferred stock, common stock, additional paid-in capital, accumulated deficit, and non-controlling interest. Now, you might think that this is another bad sign and that the company is running out of money and facing bankruptcy. But this is another smart move by the company and a positive sign for investors. Why? Because by reporting its financial results transparently and honestly, the company shows that it is accountable and responsible for its actions and decisions. The company is also showing that it is proactive and strategic in seeking new sources of funding and financing for its ambitious projects. Finally, by raising more capital, Mullen shows its clear vision and plan for future growth and expansion. Thirdly, Mullen faced some regulatory hurdles and delays in its product launch. For example, the company announced receiving a subpoena from the Securities and Exchange Commission on April 8, requesting information and documents related to its business combination with Net Element in August 2021. The company said it cooperated with the SEC and believed the subpoena was part of a broader investigation into exceptional purpose acquisition companies, SPACs. The company also said that it had postponed the production of its flagship electric SUV, the 5, from 2022 to 2025 due to supply chain issues and engineering challenges. You might think this is another bad sign, and the company is facing legal troubles and technical difficulties. But this is another smart move by the company and a positive sign for investors. Why? Because complying with the SEC's request and openly disclosing the delay in its product development demonstrates its commitment to compliance and trustworthiness. It also reflects the company's realistic and prudent approach to managing expectations and timelines. By postponing the production date, Mullen emphasizes its dedication to delivering high-quality products that meet customer needs and satisfaction. However, these factors have led to uncertainty and doubt surrounding Mullen's prospects and viability. The stock has been trading below $1 since May 19th and has been on the short sell restriction list since May 21st. Short sellers, who bet against the stock by borrowing and selling it with the intention of repurchasing it at a lower price, are unable to sell the stock at or below the current best bid price. This situation indicates a lack of confidence in the company and can exert downward pressure on the stock's price. Nevertheless, for long-term investors who believe in Mullen's vision and potential, the current situation presents an excellent opportunity. Buying Mullen stock at its low price offers a significant discount and the potential for substantial profits when the stock rebounds in the future. The belief in a rebound is based on several positive aspects of Mullen's business. Mullen boasts an impressive portfolio of electric vehicles catering to various segments and markets. In addition to the 5 SUV, positioned to compete with Tesla's Model Y and other luxury EVs, Mullen offers the Dragonfly K50 sports car, expected to rival Tesla's Roadster and other high-performance EVs. The MX-05 crossover SUV aims to compete with Tesla's Model X and other mid-range EVs, while the MX-07 compact SUV targets Tesla's Model 3 and other affordable EVs. Furthermore, Mullen's innovative battery technology provides a potential competitive advantage. The company claims that its battery technology achieves higher energy density, faster charging speed, longer cycle life, lower cost, and better safety compared to conventional lithium-ion batteries. Mullen also asserts that this battery technology can be applied to various applications beyond EVs, including grid storage, aerospace, marine, medical devices, and consumer electronics. Mullen has recently announced some exciting news that could boost its sales and reputation in the market. On May 23rd, Mullen announced that it had partnered with Amaret Fleet Solutions, a service and warranty provider for vehicle fleet programs with over 1,800 service professionals across the U.S. to provide national fleet servicing for Mullen's commercial vehicles. This includes the Mullen Campus EV van, which can carry up to 2 tons of cargo, the Mullen 1 Class 1 EV cargo van, which can carry up to 3 tons of cargo, and the Mullen 3 Class 3 EV cab chassis truck, which can carry up to 6 tons of cargo. These vehicles are designed to meet various needs of fleet operators such as delivery services, utility companies, construction companies, and more. Mullen said Amaret would provide national fleet service and warranty repair work for these vehicles before launch. Amaret will also work closely with Mullen's commercial product team and vehicle technicians in different parts of the U.S. to train on Mullen's commercial vehicles, establishing servicing protocols and requirements. This partnership could be a game-changer for Mullen, as it could enhance its customer service and satisfaction, increase its sales and revenue, and improve its brand image and reputation. Mullen expects to begin Class 3 fleet deliveries in August and September 2023. Another piece of news that could benefit Mullen is the massive sell-off of its stock that occurred on May 19th. That day, Mullen stock price dropped by 10.08% to $1.07 per share on a volume of 34.27 million shares. This was more than 3 times the average volume of 10.67 million shares. This indicates that many shares were sold by some big investors or institutions who might have wanted to exit their positions or take profits. Now, you might think this is a negative sign and shows a lack of confidence and support for Mullen. But this is a positive sign and an opportunity for new investors to enter the stock at a lower price. Why? Because by selling their shares, these big investors or institutions are freeing up more shares for the public market, increasing the liquidity and availability of Mullen stock. This could attract more buyers and demand for the stock, driving up its price in the future. Moreover, by selling their shares at a low price, these big investors or institutions also reduce their influence and control over Mullen's stock price and performance, allowing the market to reflect Mullen's actual value and potential. Therefore, this sell-off is a blessing in disguise for Mullen and its shareholders, as it could create more room for growth and appreciation for Mullen stock in the long run. What do I think about Mullen stock? The company has made progress in its electric vehicle business and has made strategic moves to secure its future success. The company also faces a lot of opportunities and advantages in the EV market, such as growing demand, favorable policies, loyal customers, and more. Before you go, answer this question in the comment section: is Mullen stock the ultimate bargain or a sinking ship? Comment now and share your thoughts. That's all for today's video. I hope you found it informative and entertaining. If you did, please hit the like button and consider subscribing to our channel for more videos like this. Guys, we have an excellent compilation of our Mullen videos, so if you want to check more, click our playlist right here and enjoy.